Hi traders, Nathan Bray here from ACY Securities. Now I want to have a chat to you about this trading adage. That is, if interest rates are being risen, and they are around the world, that is positive for a currency. So if we're rising rates in line with expectation or even above that, that's going to be really positive for that particular currency. Well, of late, we've seen interest rates being risen around the world, and in fact, we've even seen really sharp sell-offs, okay, in line with the longer term trends there, very sudden. So why would that be happening? And I want to think about whether or not this is going to continue and whether one needs to perhaps adjust their trading strategy in line with the sentiment and the data that's coming out. So think about it this way. If you're a football team and your team is doing really well, so throughout the year you're having plenty of wins, a few losses, and you're doing well, you're heading towards the final. Now, because you're doing so well and scoring so many points, a bit like an economy doing really well, then a coach might say, hey, let's rest a couple of the key players who have had a long season for a little bit, or hey, let's raise interest rates just so that we can give a bit of a pullback to the economy. But because the team is playing so well, they can handle it. It won't make a difference. And this was the kind of talk that was coming out by Jerome Powell in the USA. But what happens if the team isn't doing well or an economy is weak? Let's say there are some players that are very tired, they're getting very beaten out of shape. In other words, we've got really low growth, we've got really high debt. There's probably no chance they're going to make the finals at this stage. What happens when a country is forced to rest players because of injury? That's the kind of situation that we're seeing at the moment. And therefore, we're getting these really sharp sell-offs in particular currencies as they choose to raise interest rates. Just to use a really crude sports analogy. Now, if you look at, say, the Great Britain last night, so the Bank of England, they raised rates last night by 50 basis points up to 1.75%. And the Bank of England, it's the highest raise in about the last 30 years. So you would think that would be really positive for the currency, but instead we saw about 100 pip sell-off in about 15-20 minutes. And we tried to see a bit of a revival, but we got a very sharp, very quick sell-off. Now, keep in mind, the monetary policy statement did come out suggesting that they're not planning to be really aggressive potentially in the future. And they did talk about that evil R word, that recession word, talking about it could be a long recession at some point in the future. So that would have hampered it. But you'll notice that an economy that is showing signs of weakness and forced to raise to fight inflation, okay, we're getting these really sharp sell-offs. Now, if we move from Great Britain to Australia, so earlier this week we saw in Australia again a 50 basis point rise up to 1.85% by the Reserve Bank in Australia. Again, we got this sudden sell-off. So each time we saw that price, it wasn't like it was a buy on the rumour, sell on the fact type of scenario. We saw a scenario where the price was going a bit sideways, waiting for the announcement. And when the announcement came, we saw a big sell-off on the Great British Pound. We saw a big sell-off on the Aussie dollar. And one of the first countries, New Zealand, who'd been raising rates since late last year, one of the first central banks to bother to start raising, as they were raising multiple times and aggressively, we saw a similar fashion where we got very sudden sell-offs. And the question I'm putting out to everybody is, have a look at key support and resistance levels. When you look at the pound's performance, the long-term trend is down, especially on the cable, and at the moment on the pound yen. We saw massive sell-offs right up on the cable up to about 122. So what we're looking for then, traders, is to see if price can rally back up and previous support is going to become resistance. And that level around 121.60 is the level I'm keeping an eye on. Now, earlier this week, I was talking about looking at the Aussie against the US dollar at that 68 90 level of resistance. Is that old support level long term going to become resistance? It's trading right around there tonight. So you've got currencies that are selling off because they're forced to raise interest rates. Well, I'm looking forward to seeing how the country, which is or is not at this point in a recession, that being the US dollar, they're going to come out with their non-foreign payroll scenario tonight. So what will the data be like? Will wages start to raise? Will they meet their expectation? Because if we have a weak data coming out on the US, that could also push, say, the Aussie, the New Zealand, and the Great British Pound or the cable higher to look for entry points to keep trading in line with the trend. Good luck with your trading, everybody, and have a great weekend.